Hello everybody. I think we'll make a start. I did notice when I played it back last week, the sound was a little bit quieter than usual. So if you can just confirm what it's like at your end. I've messed around with it for this week's session, which is normally the kiss of death to really mess everything up. So if you can let me know how it's working, that'd be great. And if it's all working at your end, okay. Let me just make sure that's all right there. I think that's okay. Oh, there we go. I'm playing it back here, so that sounds okay. Right, let's get into it. So we do this every week normally, and if you've never attended one of these before, just to explain how it works, we have a quick look at the announcements coming out next week. Then we look at the major markets, stock market indices, oil, gold, silver, FX, and some cryptocurrencies. It's been a strange week this week, I think. Well, we'll start off with the S&P. I was not expecting this big slide we had in stock markets yesterday. So we'll kick things off with stock markets in a minute. But first of all, let's just get the housekeeping bits out of the way. Let's do the risk warning. This presentation is only for educational purposes, does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, there's that done. A quick look ahead to next week. It's a bit of a quieter week next week. I don't think that means that markets are going to be quiet, but on the announcement front, a bit quiet. So Wednesday, Australian inflation. Inflation is clearly massive topic still, not surprisingly. And I did see that someone put in the comments, Fed is so behind the curve. And I think they are. I think these central banks are, like you say, behind the curve, lagging. They were far too complacent about inflation last year. And here we are. We've got 4-decade high inflation in the States hanging around for longer than anyone was talking about last year from a central bank point of view Anyway, so that's next week. Wednesday, Aussie inflation. Thursday, Japanese interest rate. Again, might be interesting. And then next Friday, when we'll do the live stream again anyway, European GDP. So how healthy or not is the European economy? Right, let's just do the contacts and then we'll get into the markets. So Capital.com is obviously who we do this with, who I'm doing this with, who I work for. Any questions after it, drop me an email, david.jones@capital.com. At Jones the Markets is me on Twitter, jonesthemarkets.com to find out about the trading course that I run, and follow Capital.com on YouTube, Twitter, and Facebook. Right, that's it. Let's get into it. So let's have a look at this slide yesterday. And I was doing a bit of reading before I came on today, and it does seem to be inspired again by inflation concerns. And I was reading in the Financial Times today that now expectations are for the next 3 Federal Reserve rate rises in the US, of course, it might be 0.5% each time, which I think seems quite punchy. But, the classic way of trying to stop or keep a lid on inflation is to raise rates. So yeah, Fed behind the curve. All central banks I think are behind the curve. It's a really interesting year. I did a thing yesterday. We did something with Reuters yesterday, and I think we're going out on Reuters next week, and I'll retweet it from Twitter. But it was about investing in volatile markets, and I think it's incredibly difficult at the moment because this is an economic backdrop that many of us, me included, haven't really had to face before, where you've got the spectre of high inflation sticking around. I certainly wasn't investing in the 1980s. I guess that many of the attendees weren't as well, But I think it's interesting. And I just saw someone said it's all getting priced in. And I'd be a buyer, I think, still of the S&P down here. It'll be an interesting afternoon to see how it goes on. I think I do have a trade on the S&P at the moment on this account. This is the account that I use on these videos that we do. And it was doing okay till yesterday. But I bought in, whenever we did an S&P video, 14th of April, when was that? A week yesterday. Bought in at 44.47 with a stop at 43.30. So well below that recent low. And I think it's going to be an interesting afternoon. I would be looking to be a buyer personally. Maybe it's a trade we'll do later on. And the big level for me to watch is going to be this low down here from the 18th of April. So 43.60. Let's see how the market trades around here as the day goes on. But anyway, let's go back to our bigger picture view as usual. Let's go back and look at the daily charts. So we know, over the last couple of years, since that coronavirus low and the market started recovering and then just took off, I would never say it was an easy market to trade, but it was definitely easier. People were rewarded for buying the dip. We'd have a little dip on the S&P and the Nasdaq, and the market would just take off again, a few little dips along the way, and it was all easy money. Clearly, this year is very different. But what makes me mildly positive on stock markets here, more inclined to be a buyer rather than a seller? Couple of things. First of all, I do wonder if that correction on the S&P we'd been in, to me that looks over, right? That was the high from early January, very early January, ran down into mid-March, and we broke out the trend, and we've broken some of these, I think, fairly important highs on the way back up. I have to say, actually, I've just remembered, in my own trading account, I'm actually still short the S&P. I did buy the Nasdaq this week, so I've got, in my own trading account, I've got a short on the S&P running from here with a trailing stop, which is up quite a bit, and I've got a long on the Nasdaq, which is down, but not losing as much as I'm making on the S&P, if that makes sense. So I think we've got a bit of a topsy-turvy market at the moment. But for me, I'd still be a buyer on dips, and that's why I think yesterday is interesting. How far does this dip go? I think if we start trading, let's call it 43.50. If we start trading below 43.50, perhaps the risk is we'll have a deeper sell-off. But for now, I wonder if we'll see buyers come back in today. Let's see what happens. Anyway, the other thing that makes me positive, mildly positive, I should say, on stock markets is the fact that the low that was set here, Feb the 24th, when Russia invaded Ukraine, hasn't been taken out. So for me, I would still be a buyer on weakness back to that low. So let's see what happens. But let's do a trade. Let's kick the session off today with a trade. So me sitting here saying, I think this could be an opportunity. Let's actually do it. So what I'm going to do, we had this run from the 18th. That was that last week, wasn't it? Last week. And we've seen, good support for the market, 43.60 to 43.80, let's call it. So I'm going to buy the S&P. So I've got that existing trade on the S&P. Let's do a trade on the S&P now. So I'll go 43.50 for a stop loss. If I was doing this in my own account, I'd wait for things to calm down a bit because, it's only just officially opened 10 minutes ago. So I would wait for things to calm down, but I think it always makes these things a bit more interesting if we get a trade on. So let's get a trade on now. So I'm going to buy 5.5 contracts of the S&P, wherever it's trading now. Stop loss at 43.50, which is the other side of that low from the 18th of April, and the risk is 100 quid or so, which is what we normally do on these live stream trades. There we go, fingers crossed. It's all moving against me already, or moving up already. Okay, so we bought 5.5 at 43.76.8. So I think it's going to be an interesting session. So for me, I think it will be a while. I'm not expecting fresh all-time highs anytime soon. So even though I'm moderately bullish on stock markets, I don't think we're going to be troubling these old highs anytime soon. And perhaps what we have is just chop in markets now, like we've had, I'd say, broadly speaking, for the last couple of months. So I think it is going to be a difficult year. But S&P, interesting. Let's see where it stops today. Let's see what happens. And the same for the Nasdaq, really. Again, we had seen, the Nasdaq was hit much harder this year. I think at its worst point, the Nasdaq was down 20% for the year to date, whereas the S&P was down only around 15% for the year to date. The Nasdaq did trickle below that invasion low there, so that was, and then bang, it just rallied up like a maniac. Again, I'd sort of be saying the same thing about the Nasdaq as the S&P. Not surprisingly, has that correction slide, whatever you want to call it, has that ended. So I think these markets can be really interesting next week to watch. So I'll be watching for strength to come in, but if these markets carry on sliding, I'd be rather be standing aside. But I wonder if yesterday's move has been overdone. Let's see. There's only one way to find out, and that's to watch it and see what happens in the days ahead. So that's the Nasdaq. FTSE, let's bring it over to the UK. I'm guessing the FTSE won't have been hit as hard. No. I mean, the FTSE, you can see how much better the FTSE is doing this year compared to these US indices, and there's a very good reason for that, of course, that the stocks that make up the FTSE 100 index are a very different mix to the stocks that make up the S&P and the Nasdaq. We've got the go-getter high growth stocks in the US indices, and for the UK, it's got a much more defensive makeup. Traditional, some would say boring companies, blue chips, pay a dividend, make a profit, blah, blah, blah. So it's massively lagged on the way up from the coronavirus lows, but it's not getting as hit, as you can see, hit as hard as US stock markets are. So for the year to date, the FTSE is actually slightly up. So it ended last year around 7,400, give or take. The market's 7,560 at the moment, so we're slightly up. But if we did see this slide yesterday turn into a more protracted sell-off for the FTSE, then if not the FTSE, sorry, for the S&P, I think clearly we're going to see this FTSE getting dragged down. So if you were sitting there thinking we're going to see a massive bear market this year, and what we've seen so far only scratches the surface, FTSE short up here looks good in terms of risk reward if you are of that persuasion. Because if you thought, well, markets are going to fall off a cliff now, going short the FTSE with stops above 7,700 looks interesting from a risk reward point of view. It's not what I would do, but it's not a terrible trade at all, But so I think it's interesting up here, the FTSE. Let's see what happens. Let's have a look at the DAX. I'm guessing the DAX got hit a bit. Yeah, not drastically. So the DAX does seem to be, US markets took the brunt of it yesterday. Now the DAX, I suppose, with the DAX does have a bit of a tendency to sort of do its own thing, and you could argue that trend, that downtrend for the DAX is still very much in place off those 2022 highs. So actually, if you wanted to go with that trend, you'd be going short. I don't trade the DAX myself. I stick to the US markets. So if you wanted to go short the DAX, for me, if I was trying to get into this trend, going short the DAX with stops, I would have my stop above the March high, 14.9, which is a long way away from where we are now. You don't need to keep spamming the comments with palladium, okay? But if you put the market you want looking in once, that's it. I will get to it, okay? But first of all, we go through our normal market. So please don't spam the comments, or I'll have to kick you out. So the DAX still in a downtrend, looking from that. So quite a bit of a mixed picture, really, on these stock markets at the moment. And the Nikkei, we did have a short on the Nikkei. We'll take a look at it in a second. And arguably, that Nikkei trend is still going. That's the downtrend. The Nikkei, again, did its own thing last year. For much of last year, as other markets, of course, again, particularly with the US focus, were just going up and up and up. The Nikkei wasn't. The Nikkei just struggled. Just went sideways and then started selling off in September. So I think we did, let me have a quick look. We did a short in the Nikkei on a live stream. And I think it only got closed out, hold on a second, the other week. Because I think people often say, I don't do updates on the trades. And I don't, because there are often so many of them, I just forget. But there you go, there's the Nikkei. I think we did, so it got closed on the 14th of April. we did a short on a live stream a few weeks ago. So it made 100 quid. It made the risk on the Nikkei. And the two big winners, two natural gas trades, have been closed out this week. So we'll have a look. We'll have a look at natural gas as well. But there's an update. That's the silver. I did the silver trade just on the video this week. I did a trade on silver and got stopped out a bit. Looks like this morning, actually. So the usual mix of winners and losers, but a couple of nice big winners in there over the last month or so. They got closed out. But we'll take a look at those in a bit more detail. So so stock market's interesting. I am still a bit confused by it all personally, so let's see what happens. That market is tanking a bit now. I was a little bit premature on that, premature execution on that S&P trade. Maybe it'll end up getting stopped out, but that's what stops are for. So that's pretty weak start to the day for US stock markets. I think it's going to be an interesting session. It could be a really volatile session today. Let's take a look at some of these other markets. I've seen oil getting mentioned in the chat. I have to say now, I think oil is going to be a boring market now. I think let's just take a step back and look at the year we've had for oil at its peak at 125 or 126. This is West Texas cash. The market was up 70%, 70%. For the year to date, and that was when we were 10 weeks into the year, and clearly we're trading where we are now. We're trading at $102, and so the market's dropped about 20% from those highs, and I just wonder what would it take for oil to go bursting through those highs. So personally, again, I think it's going to be a while until we see those highs again for oil up at 125. So for me, I would be a buyer, excuse me, I'd be a buyer of a dip, but this is the recovery in oil going back to April 2020. I'd much rather see a bigger dip. I'd be a buyer if we dip back below 100 and back, we've seen a good base for oil from 90 to about 92, 93. So I'd be a buyer there. But, if I was in now and hanging on for 125 again, 125 a barrel, I think I'm going to have a long wait. So, happy to be a buyer on weakness, but I don't think it's going to be a very exciting market after the sort of start to the year we've had. So maybe it's a market, again, that just ranges, I think, oil. So there will be trading opportunities, but I can't see it running away. And natural gas has been, yet again, it is a nuts market, natural gas, when it gets going. We did a video on natural gas this week. I did a trade on natural gas this week. It wasn't the most convinced I've been of doing a new trade. But, again, when we do the videos looking at these different markets during the week, I do like to try and get a trade on. So we've seen this run in natural gas. And clearly, when the Russian invasion of Ukraine happened, oil went crazy, gold went crazy, but natural gas didn't. And then it's been over the last month or so, as there's been this threat, which I think is now taking form, where the EU is going to stop buying its natural gas from Russia. This natural gas market is US natural gas. There have been increased exports from the US to the EU. There's been cooler than expected weather in the US. All of this has a massive impact on natural gas. And look at the move we've had. Over the last month, gas has gone from 465 to 8 something. Earlier this week, 820 nearly. And if you take this out, that is a 13-year plus high. Okay, so there we go. That's at the highest levels since we've got to go back there, September 2008. So that's a massive move. But natural gas can just as quickly turn these trends around. So I was a buyer this week in the video. I can't remember where I bought it. Natural gas. I was 7.30 with a stop at 6.30, and it's trading at 7 at the moment. So I do wonder if, a bit like oil, that recent move in natural gas, that's the move for a while. Okay, so I bought it because I thought, I looked on the hourly chart and the trend was up, and I put a stop down here somewhere, and it's sort of flip-flopping around the 7 mark at the moment. But I do wonder again if a lot of the momentum is perhaps going to disappear from that market, given the size of the move we had. But if I had to do a trade now, I'd still be a buyer because the trend is up. So I just saw in the comments, someone said they've been short natural gas since 4.5. Well, I have to say, what would you do? If I can be blunt, what you should do in the future, pay a bit more attention to risk control, because you've been short since down here. Yeah? So you've been short in a market that's gone, well, not quite 100% against you, but an absolute bucket load against you. So this is a great, there's two great lessons here. First of all, don't go against the trend. And even before this, right, before all this craziness, natural gas is in a definite uptrend, right? And even if it slides back to 4.5, it's in a definite uptrend. So we've still got this uptrend going back to June 2020. So we're nearly 2 years into this uptrend. So don't trade against the trend. And if you're going to put a trade on, put a stop loss on. Yeah, I hope it's not too painful a loss for you at the moment. Obviously, I don't know where it's going to go next. When we're trading, all we can do is play the probabilities. So good luck with your short, whatever you decide to do from here. But, you know, don't put yourself in a position in the future where your market is that much against you, would be my recommendation as a broad trading strategy. You know, we want to try, it's really important to manage risk. I've talked about this quite a lot on these live streams, but the main reason, I'd say there's 5 main reasons people lose money trading. And one of the bigger reasons is their losses are so much bigger than their profits. Okay, so even if somebody is right 6 times out of 10, the average winning trade is typically, let's say it's £100. The average losing trade is £180. So even if you're right 6 times out of 10, you lose money overall. Yeah, so it's really important to get this balance between risk and reward on winners versus losers. Okay, and the way of doing that is when a trade is going wrong, that bang, you're out of the position. So yeah, I'd focus a bit more on that. Right, what did we just do? Okay, let's have a look at gold. Let's have a look at see what gold. So gold should be going up, shouldn't it? And it's not. So gold again. I have to say with gold, did we do? No, we did silver this week. With gold, first of all, the big trend is up. If we go back to the summer of 2018, so we're 3.5 years plus into this big uptrend for gold. Still be a buyer on dips, absolutely a buyer on dips. But personally, I would probably want a much bigger dip than where we are now. For me, what's also interesting in gold, and again, like oil, I wonder if we've seen all the excitement in gold so far this year for maybe quite some time. What's interesting was, we had the Russian invasion, and even on, the threat and the result of a land war in Europe, gold could not take out the old all-time highs. So again, I'd think, well, what is it going to take for gold to trade through $2,075? So for me, definitely medium term, I'd like to be a buyer, but not here for me. And look at what's happening with stock markets. We've seen sharp falls in stock markets. Inflation, the inflation story gets worse month on month, and gold has slid about $50 over the last week. So for me, it's an interesting one to watch next week. We've seen a lot of support for gold at 1880 to 1920. I think somewhere I've got an order from an old video. There we go. We did a video on gold beginning of April. I've got an order to buy at 1890. So that order's been in for about 3 weeks now. And to me, that still looks like an interesting trade. If gold does get knocked back to here and I get filled, it looks like an interesting trade. So I think from a short-term point of view, there are some interesting levels to watch on gold. That's an hourly chart, but I'd probably rather be a buyer on a bit more weakness. So I wonder if it just ends up being some quite, again, choppy trading for gold over the next few weeks, next few months, and no real direction. So it's been an interesting year, and I wonder if it gets a little bit boring. Silver, I absolutely hate silver. I think I often say that. Silver is, I think the video I did this week on silver, said silver is the market that starts a trend and then always disappoints. If you go back and look over the last year, it's probably longer than a year now, isn't it? Back to September 2020. So it's just sideways, silver. I think, and I know there's quite a big fan base for silver and buying silver coins. and talking about silver getting to 30, getting to 50. I just can't see it. It's just one of the dullest markets around silver. So I think there are opportunities from a trading point of view, but just bleh. It's just boring. It gets a trend, and then as soon as the trend gets started, it just disappoints and falls out. I suppose you could make the argument if you were a short-term trader, that maybe there's a trade down here now. We had that spike low at the end of March at $24. It's traded down to 24 and a bit, $24.06, $24.10 this morning. So if you want to, if I absolutely had to do a trade now on silver, I'd be a buyer, and I put my stop the other side of 24. But I think it's you look at the dailies, and it's just a boring market, silver. So for me, I know it's a popular market on the channel, so we always do regular videos on silver. For me, for my own trading, I don't think I've traded silver for a year, because there's just, for me, there are better markets out there until it starts getting a bit more interesting. But let's see. So that's silver, still the same old, but maybe short term we'll see a bounce after this 24 level was touched today. Let's talk about currencies. There's a lot going on here. The pound today, pound against the dollar. We had those, let me just remind myself, I'll just bring the news up. There was the retail sales data. And this is the problem, of course, isn't it? Inflation is where it is, and it's not going away anytime soon, it looks at the moment. Central banks would traditionally raise rates to control inflation. But if they raise rates, what effect is it going to have on the economy? And I think this, we've maybe seen not an overreaction, a bigger reaction than normal today, because we had retail sales data for the UK, and retail sales in March dropped. I think they dropped more than expected. So they fell by 1.4% in March. And the worry is, of course, everything's getting more expensive. So consumers, and I'm sure we all know, if you had to go and I did my most expensive fill up of my car about a week ago that I've ever done in my life. We know that everything is expensive. So people are spending less money. What else was I going to say? And the risk is, if central banks put up interest rates, we'll tip into a recession. So it's a really difficult balancing act. So I think these are why we're seeing the pound hit so hard today. So this is pound against the dollar, currently trading at its worst level since November 2020. So 128, 129 is where we are. We've had this downtrend. We've looked at this downtrend lots of times. I've really missed my opportunity to go short the pound this year, to be honest. I don't think I've done a medium-term trade on the pound. So for me, it was great. Hindsight, of course, that was the perfect one. When it was up at 136 in middle of February, back up to that trend line, back up to the old highs, and it's fallen off a cliff. So still really weak. I would still be looking to get short if we get a bit of a bounce back next week on pound against the dollar. But some big levels to come up, big low coming in from September 2020 down around 127. So let's see what happens with that one, but still pretty weak. Let's take a look at the euro, which I'm guessing again is going to be a bit weak. Yeah, so the euro downtrend is still going, not slammed by the pound today. I like the pound today, sorry. So there's the euro downtrend. And again, I do wonder, for me, I wouldn't trade it at the moment, but I do wonder, will we see the euro start to turn round a bit over the next few months? The trend is definitely still down. And this trend, if we go back, since it's been falling since the beginning of January 2021. Yeah, so back then it was at 123, and here we are at 108. So it's lost 1,500 points. So it's lost about, what's that? About 12%, 12, 13% the euro has lost against the US dollar over the last year and a bit. Still pretty weak. I do wonder if it ends up having something of a comeback later on in the year. Historically, these were really big levels for the euro, down at 106, 108. So if it's going to start turning around anywhere, perhaps this is the area. But I wouldn't be in a hurry to buy at the moment, because clearly the thing is still so weak. And we can't do currencies without looking at the old favourite, the dollar index. I absolutely love this market. I know I say it every week, but brilliant. It's just a great market, the dollar index, in my opinion. It's the US dollar against a basket of other currencies. So what are the currencies? I can't remember. The yen, the pound, the euro, the Swiss franc, the Canadian dollar, the Norwegian one, the Swedish one, a whole load of things mixed in. And it's just been a great market. I mean, I've had trades running on this for the last few years at various points. I added to it last week when the market broke out. And here we are again. The dollar index is trading at 100.9, which is the highest since April 2020. So we're 2-year highs. 2-year highs on the dollar index. I think is, for me as a technical trendy trader, it's a really good market, I think, from a trend point of view. So for me, any weakness in the dollar index, I'd still be a buyer. I think it is a bit overheated, maybe more than a bit overheated up here, at these levels. But still going strong. So for me, I'd rather, if I didn't have a trade on, I'd probably rather be a buyer of dips from here, but incredibly strong, and another move today to a fresh 2-year high. So it's a really interesting. I watch this market much more than I'd watch the pound against the dollar or euro against the dollar. I just watch the dollar index. And while we finish off, let's have a look at euro sterling, because that would got a bit of a bounce, a bit of a lift today, clearly, because the pound has been so weak. I mean, over the last, I suppose if we went back to there, the story over the last 2 years is the euro has lost ground against the pound. Back in March 2020, a euro would buy 95 pence. Today, a euro buys 84 pence. Okay, and we do have, for me, the trend in euro sterling is still down. So, if we were going to take the dollar out of the equation, this is a market I very rarely look at, but it could be interesting next week if we see this euro sterling get bumped up a little bit from here, even higher than where we are now. Perhaps that's a good short of euro sterling as this downtrend continues. So let's see what happens, euro sterling. So that's it. We've done currencies. Let's have a quick look at the crazy world of cryptocurrencies. So I think I did say the other week that I bought Bitcoin, didn't I? I'm still in my Bitcoin trades. So I think I bought it at 39, and I've probably have I given back too much profit? Maybe, but I'm still in the trade anyway, but we'll see. So for me, again, I think with crypto, it's quite interesting, crypto. You see a massive drop off in people talking about crypto and on social media when the price is boring like now. I think it's a real FOMO market, as I'm sure plenty of you know. It's only when the market's moving that everyone gets excited about it. Personally, I think it's going to be a long wait till we see 68,000 again. Let's see what happens. But, it's been a bit, I suppose it's trading now where it was 2.5 months ago. So it's not particularly exciting. But I do wonder if this correction that we've been in since November last year, is that over with the moves we've seen over the last couple of months? So I've bought into the little recovery. We'll see what happens. Yeah. So nothing particularly exciting. I think if it takes out these lows at 32, 33, there is support. It's big support at 28,000 for Bitcoin. I mean, I think if it broke 28,000, it could be absolute carnage from a selling point of view, a sell-off point of view. I'd be out long before then. But let's see. We've got this gentle recovery going on at the moment. Let's see how it works out with Bitcoin. So that's it. So interesting stuff to watch next week. Not for me, not oil, not gold, not those markets. Stock markets, see what's going on in stock markets after this, sizable fall yesterday. I'm still... So this is interesting. This for me makes for an interesting trading market. The S&P, and I'm sure we're seeing similar in Nasdaq, with it hanging around near an important old low. So I think we could see quite some swings today in the S&P. Let's see what happens. So for me, stock markets are probably the more interesting markets to watch next week. to see what happens here. Are we going to see buyers come back in? Or actually, because of these inflation concerns, we're just going to see these markets fall off a cliff and we go back and test the old lows from earlier in February. It should be, I think it'd be a really interesting week. So for me, stock markets would be the markets to watch rather than anything else at the moment. So what I'm going to do, I'm going to jump into the questions and try and answer, have a look at some of the markets you want looking at. We've got about 20 minutes. Quick reminder of where to go. Go to Capital.com to open an account, download the app, all of that sort of stuff. David.jones@Capital.com if you have any questions, any trading questions after this. @JonesTheMarkets is me on Twitter. JonesTheMarkets.com to find out more about my trading approach and the trading course I do. And follow Capital.com on YouTube, Twitter and Facebook. Right, so let's take a look at what's going on. What do we want to have a look at? So I did see Netflix come in early on. Netflix has been absolutely slammed, isn't it? We are going to do a video early next week on Netflix. I mean, that is a heck of a move, isn't it? Over the last, since November, it's the last 5 or 6 months or so. So we did have this long-term trend in Netflix, and then traded up to $700 in November. Absolutely clobbered there on one set of earnings. And then, as we know, I'm sure you know, losing subscribers for the first time in its history, is it? I don't know. But, big news that Netflix is losing subscribers. It's said that, passwords getting shared around. I'm sure nobody on here shares their Netflix password, but that's a real issue and is going to try and clamp down on it. And here we are, currently trading at $230 and it ended the year. Where did it end last year? Ended the year at 603. So it's lost, what's that, $400. So 60% fall so far this year. I mean, to me, that seems brutal and it seems overdone. I think this, we're now back to, pretty much, 2018 levels for Netflix. Well, it's a 4-year plus low for Netflix. So I'm always tempted to think, well, perhaps it's overdone, but I'd rather the thing stopped falling before buying in, and even yesterday, the market nudged a bit lower. An interesting one to watch next week. Do we see some stability come in? For those of you who are fans of the RSI, really oversold on the RSI, as you'd expect. So, let's see what happens. But maybe we get a bit of a bounce back. But again, I think it's going to be a long wait for $700. I think for Netflix again. But I think it is interesting down here. It's always interesting. I think when we get a significant reaction to a market, is it overdone? Is it the start of something bad? I would be leaning towards we could get something of a recovery, but I want to see it at least stop going down first of all. Let's see what happens. We looked at the Nasdaq. We looked at that. We looked at Netflix. We looked at oil. Palladium. I did do a trade on Palladium last week actually in my own account, and it's been slightly in profit, slightly against me, a bit flip-floppy and a bit boring. For me, I suppose there's a couple of ways you can look at it. I mean, clearly, I bought it, so I think it's going up. But for me, we did have this trend in Palladium from December last year, and again went crazy on the Russian invasion, pushed out to fresh all-time highs, up at 3,400. It's got knocked back. It's not knocked back an awful lot, but I bought in, even though the trend line had broken, I bought in thinking that, again, perhaps the move has been overdone and will gradually claw its way back up to 3,000. So that was my reasoning for being the trade. I probably bought in pretty much here, near enough, because it just flip-flops around at the moment. But for me, if I was a buyer now, the closest I'd want my stop would still be the other side of $2,000. So I think we could see perhaps a gradual recovery in the price of Palladium. But if it goes below $2,000, then I'd be out. I'd be out of the trade, to be honest. And it's a bit boring over the last week, Palladium. So let's see. Renault. What do you think about Renault? Will it start recovering for me? I think you have a trade. I do. We've got a trade from, where is it? A live stream, wasn't it? Did a live stream, 8th of April, so was it 2 weeks ago? Bought Renault. I remember somebody saying, let's have a look at Renault, it looks like a short. And I remember thinking it looked like a buy. So we did buy Renault at €21.87. Let's take a look at it. The car industry is a funny one at the moment, isn't it? Because of supply chain concerns, the sales, the waiting list for new cars. I think I was reading for what car was it? I think it was a VW Up, the little VW that they do, Volkswagen. It's almost a 12-month waiting list. I think I was reading. It's like 46 weeks if you ordered a new VW Up now, because they can't get the chips. There's a chip problem, isn't there? That's been going on for quite some time. And also other production bottlenecks as well. So it's a strange old place, the car industry at the moment. But here's the Renault chart. So we did the trade. When did we do it? So the 4th of April, I said, didn't we? A couple of weeks ago. So back here, we did the trades. And to me, it's still, if I had to do a trade on it and didn't have a trade on, I'd still be a buyer. We got knocked back from €38 in February. So it pretty much halved almost into March. But we did have these old lows from 2020, from May 2020 through to October 2020, just below $20, 20 euros. So I think it's interesting, Renault. I mean, it needs to get a bit of a move on. Maybe if stock markets are going to fall, the risk is it gets dragged down with it as well. But for me, I'm happy to stick with that and see how it works out from here. Xenon, I'm not sure what Xenon is. Is it a crazy cryptocurrency or is it something else? I don't know. Whatever it is, we don't cover it. So unfortunately, I can't look at that one. DXY, yeah, we looked at the dollar index. Got stopped out at silver. Lloyd's Bank. Lloyd's, the UK listed bank. Oh, don't give me this. Come on. There we go. It just looks a bit messy, doesn't it? It's all over the place, isn't it? Lloyd's. We did have a good trend. It fell out the good trend. Had another go. For me, this is one of those ones where if we looked at it in 2 months' time, it wouldn't surprise me if it was still about 50p. I mean, that's a lot of volatility. It was 55p in Jan and then 38p in March. So big swings. It's a 30% swing, isn't it? But it's just for me, it's just directionless. So for me, it's not one that would appeal. And I'm surprised actually because I thought perhaps it's going to be doing well given how the FTSE's done. But perhaps if we have a look at Barclays, yeah, similar story, isn't it? So clearly the bank. I mean, Barclays is even worse. Clearly, banks, UK banks, massively out of favour. I mean, Barclays has gone from £2.20 in January to £1.50, £1.40 today. It's interesting because I've got some UK stocks, so I know which ones are doing well, and I wondered if they would be doing well as well. What is it? National Grid. Why don't we show National Grid? National Grid. I mean, some of these utility stocks, again, defensive blue chips, have done well this year. British American Tobacco is another one I've mentioned before. So there are some interesting UK stocks out there that are doing well against this backdrop of market volatility, but not UK banks at the moment. So that looks a bit just volatile but directionless. I think Lloyd's to me on that. Netflix. We look at Netflix. Coffee and copper. I do have a trade on coffee. I think I've said it before. It's not really going anywhere, I don't think. But for me, great market from the summer of 2020 through to Feb of this year. So I traded it in bits on the way up. I think the latest trade I did is probably in January in here somewhere. So again, it's one of these markets for me, one of these trades for me. It's flipped in profit, it's flipped in loss. It's probably roughly where I bought it. And I'd still be a buyer. I mean, of coffee. Personally, the big trend is still up in coffee. The only question, and it's a big question, would you wait for a deeper pull-off? Because deeper pullback is the phrase I'm looking for. Would you wait for a deeper pullback from here? Because it's had quite the runaway over the last year, this runaway from the bigger trends. Or would you buy it now? I don't know. If I was a buyer now, the closest I would have my stop, the other side of 210 for me personally. So let's see what happens. So I think Still positive. It's interesting though, I think, with a lot of these commodities at the moment. We'll have a look at copper in a second. If you look at something like cotton, I mean, cotton's had, again, another nuts run. I mean, clearly, the reason we've got high inflation is because everything's going up in price. We know about oil, we know about natural gas, but raw materials and food, wheat, soybeans, coffee, stuff like cotton. Look how much cotton has gone up over the last couple of years. So it's gone from 53, whatever that is, to 135. So it's almost tripled in price, the price of cotton. And that's why we've got high inflation, because everything's more expensive. And then traditionally in inflationary times, commodities do well. The only question is, because these commodities have come so far, how much further is left to go? And that's a tricky question. I don't know, but so I think it's interesting we have all these big trends in these commodities, but clearly, we saw it with coffee, and you can see it now with cotton. It has accelerated away from these longer term trend lines. It sort of hugged the trend line on the way up, and we've sort of really spurted away since then. So, I'd still be a buyer, but perhaps I'd have to be a bit more patient and wait for a deeper sell-off in these markets. Anyway, let's have a look at copper. I think I've said it before. I think every time we look at copper, I say this. I think this is my oldest trade, copper. I think I've been in this trade that I'm in at the moment on copper since about May last year. Okay, so I'm up, and I'm up okay. I'm up perhaps 10% over the year, but I don't think I've ever had a trade last effectively 11 months. The trend is still up, and you can see that trend on copper going back to the March low. So the March low is down at 2, and here we are at $4.66. So again, a big move in a commodity over the last couple of years. It's still hugging that trend line, but it just doesn't really have much momentum, does it? So for me, if I didn't have a trade on, I'd still be a buyer. I'd probably put my stop loss the other side of 4.4. But it does make me wonder, are some of these trends in the commodities getting a bit tired now? It would really help inflation if we had a collapse in commodity prices. The trends are still there, but perhaps they are getting a bit long in the tooth. I don't know. I'm still long copper. The big trend is still up. 4.4 is the big level. Let's see what happens. Newmont. Do we got a trade on Newmont? We did have a trade on Newmont. No. Oh yes, we do. Down here. Okay, so we did it. We did a video on gold miners, didn't we? And there's the Newmont trade. So bought at $71 and they're $74.50 at the moment. I think it's a good trend, Newmont, from memory. And it's interesting. Oh, it's got knocked back the last couple of days. It's interesting how the gold miners, because I didn't really know this until I did some research for the video, how gold miners the gold mining index has outperformed the price of gold. And it makes perfect sense when I thought about it, because clearly when gold prices are strong, miners are using leverage to try and mine as much as possible. So you get an exaggerated move, up or down. And I think we've seen that in the gold miners. So it's been a great year for Newmont. So Newmont ended last year at $62, and here we are at 74. So it's up $12 on the year, which is, it's 20% near enough, isn't it? So 20% move in Newmont. For me, that trend is still up. It's a short-term trend, only going back to December of last year. But the trend is still up. So for me, I'd still be a buyer of Newmont. The absolute closest I would have my stop if I was a buyer today would be the other side of $70 for me personally. So let's see what happens. But that trend is still up. If it starts drifting below 70, that trend looks like it's in trouble. But it is, I think it's an interesting stock, Newmont, and there is the bigger picture. I'm just seeing that the Gap's share price has been hit 20%. So we have a look at it and see, because they've cut their guidance for the year. I mean, they were a poor performer anyway. So this is Gap, the clothing store. So they were $37 a year ago, and here we are at 11 now, just really continuing that downtrend. I mean, that's really been hit, hasn't it? That is not nice. Not a pretty chart, that one, is it? So, they look doomed to slide a bit further, don't they? Right, so we had a look at Newmont there, didn't we? Let's see, what else have we got to look at? We had a look at Netflix. News said the recession could bring the market down 87%. Do you agree? Absolutely not. 87% seems a ridiculous number. I mean, it would need to be, it could happen. Let's not say that these things can't happen. I just thought we'd take a look at the Dow for a change and see how much, an 87% move lower would put the Dow at 4,000. Personally, look, you never say never, do you? But if we have a recession, we don't have that much data on the Dow, But do we really see the Dow going back to? I'm curious now. It has piqued my curiosity. When was the Dow last at 4,000? I'm just having a look somewhere else. Hold on a second. Let's drag it over. Right, let's go right the way back. So it will put the Dow back to. Here we go. 1995 levels. So we go back to the era of Blur versus Oasis for UK viewers. So personally, I don't see it. Anything can happen in markets, as we know, but I think 87%. First of all, that's a very precise number, and it seems a little bit over the top to me. I think it seems a little bit clickbaity. But maybe we'll come back in a year's time and the Dow will be at 4,000, and I'll be forced to eat my words. Let's see what happens. Clover Oncology. Clover, never heard of those. Let's have a look. So I'm guessing some sort of obviously cancer drug company. I'm guessing, or something like that. What do they do? Clover Oncology. Oh, we don't have them. Is it? It's not Clover Health Systems, is it? It's not that one. No. Software. No, it's not them. So we don't have those. Sorry. We looked at oil, cocoa. Let's have a look at cocoa. I think the long-term trend for cocoa is up. It's just a bit boring, I think. There we go. So I probably need to tweak that a little bit, but you can see the trend for cocoa. For me, that's interesting for next week. Maybe it's a buy next week, cocoa. It's been trending higher for, I've come out of my Caterpillar trade, okay? I don't know when we did that, but fair enough. It's been trending higher for 5 years, the price of cocoa. So 2017, it was 1,700. Today it's 2,500. So it's 50% higher cocoa than it was 5 years ago. I would be tempted to still be a buyer on dips for cocoa, but I'd be more inclined to wait next week, to be honest. Let's have a quick look at Caterpillar. I think that might be another live stream trade, Caterpillar. But because I did look at that during the week and thinking, that's done quite well. But actually it's pretty sideways, isn't it? So it's been hit hard today. It's a bit of a sideways one. I don't know. There's nothing too interesting in there. Twitter. I'm shorting since Musk took over. I did a short in the Twitter video we did on that, and it got closed out. When did it get closed out? It got closed out on the 13th of April for 175 quid. That was a good trade, that. Let's have a look. Let's have a look at their price now. I find it hard to believe that Mr. Musk is going to take over, is actually going to take over Twitter. I know he did say yesterday, didn't he, that he's got the funding secured. I think it's really interesting anyway to see what happens. But I don't know if I'd be short now, though. I'm probably quite happy to be out and see what happens. You could argue, that was clearly when the news broke about his stake, his 9.2% stake. That trend that had been in place since October last year did look like it was over. I could be inclined to be a buyer on dips of Twitter at the moment, but I think clearly it's a very news-driven stock, isn't it? So who knows? Who knows what's going to happen? Silver, we looked at silver. Polymetal, I keep hearing this one come up every week. I think it's one we don't cover. Oh no, we do cover it. Polymetal. The upside is enormous. Well, the upside is enormous because it keeps going down every day, doesn't it? So every day, that is absolutely not one for me. I know, if you're in it, good luck to you. But I know people absolutely love stocks like this that are falling. To me, it looks like a dog. We'll come back next week and it'll be like 1,400. But for me, I think, if it breaks below these old lows at 650, 660, look out below, I think. But for me, the trend in Polymetal, I've only got data going back to September 2020. So have a quick look somewhere else and see how much data. But for as long as I've been involved with markets, here we go. For as long as I've been involved in markets, people love stocks like this because the mentality is, it was £20 in 2020, it's £2.70 today. Look at all that upside, but Aston Martin's another one. Aston Martin, of course, look at that. Since their IPO in, it wasn't that long ago. Well, 2018, it was. It's down 90% or more. So for me, if you're in it, good luck. But stocks that do that, no interest for me. They're too risky. What else have we got? Hong Kong dollar. No, the Chinese yuan versus the Hong Kong dollar. Okay, bit of a specialist foreign exchange pair there. I don't know if we do cover it. Okay. Oh, that's really got hit, isn't it? I thought we were going to have something of a flat line there. So what are you saying? Would you go short? Would you go short now? So what we're seeing here is Chinese currency weakness. I personally would not go short because it's fallen so far. I don't know what's caused that. Is it something? I'm guessing it's just politics and unrest. I've got absolutely no idea what's caused that. I'd be looking to be a buyer. I'd be looking to take the view the market's gone too far. I wouldn't be a buyer today though. It's a sizable fall though, isn't it? I must admit, I think it's a currency pair I've probably never looked at before. It's gone from 124 in early Feb to 120 today. So it's lost. What's that? 20%? Not quite 20%. But almost 20%. Interesting one that. Let's come back to it. I would be looking to see, are we going to see a bit of stability come in around, pretty much where we are now, sort of 119 to 120.50. Who knows? Let's see what happens. But yeah, good spot. Let's try and make it a regular and come back to it in a couple of weeks. What else have we got? French elections might affect euro. Yeah, it's interesting, isn't it? I think again with the euro, I wonder if, unless we get a massive surprise at the elections, because it does look like Monsieur Macron is gonna do it. If we had a massive surprise, it would clearly have an impact. But yeah, I don't know. I don't think we'll see that much volatility for the euro because of the elections. But let's see what happens. Eurozone is finished. Okay, fair enough. The dollar is overextended. Yeah. Blah, blah, blah. Can we have it? Okay, hang on. Netflix. We went to Netflix. Meta. Let's have a look at Meta. I mean, that's another one like Netflix, isn't it? Absolutely clobbered. The old Facebook, of course, as we know it. I suppose, I did do a trade. We did a video on Meta when it got hit back in, was it November? It wasn't. Oh, it was February. Okay. We did a video and I bought it, saying it'd been overdone, put a stop loss on, got stopped out. I suppose if you want to be really aggressive, we did see the Meta price in March, bottom out ahead of 180, had a run up to 235. It's a big run. $50 run is what, 30% move off these levels. If you wanted to be really aggressive, be a buyer again down here. Should we do it? Let's do this trade now. We'll be a buyer now at 186, making the assumption that 180 is going to hold again or near enough. Let's do the trade. So 100 quid risk. So 180 is the floor. Let's say 165. We'll give it a bit of room. So we're going to buy. How many shares can we buy? 6 shares. Buy 6 shares in Meta, or 6 CFDs in Meta, where it's trading now. Stop at 165. Risk £100. Let's see if history repeats itself on Facebook Meta. If we see these old lows hold, and again, for me, if it starts pushing below 180, I think the risk is we're going to start eyeing up the March 2020 levels down at 140. So interesting one to watch next week. I think the old Meta. Good short for gold as the dollar is strong. I mean, it's definitely one of the things holding gold back. Obviously, where's gold now? 1940, and we looked at the dollar index, didn't we? And that is the issue. The wrong one. The reason, of course, the dollar is doing so well. One of the reasons, is because we are suddenly facing many more interest rate rises or more aggressive interest rate rises than we thought even a couple of months ago, even a month ago maybe, and that is going to fuel. So something like, I wouldn't go short because I thought I wouldn't go short gold because I thought the dollar was strong. I just buy the dollar. But if that was my view, that's what I would do. But, clearly a stronger dollar is going to keep the lid on the price of gold. So let's see. Can we do American Airlines? Yes. Let's have a look at those. Let's have a look at the American Airlines group. Because I thought I don't know what I'm surprised by that. I thought they'd be either doing much higher than they were or much lower than they were, and it feels like it's only in the last month it's had a bounce. I would argue I would go short. There we go. I would be tempted to go short. So we had obviously coronavirus. They were weak anyway. American Airlines from 2018, they were weak. And we know the effect that the coronavirus had on travel stocks. Then had a run up, peaked in June 2021. So the summer of last year, they've peaked, presumably ahead of everything opening up. I think there are a couple of ways you could look at this. You could definitely take the view the correction since June last year is over, and now it's time to buy the dips. So that's definitely one view. I think, and for me, that's a perfectly valid view. And take the view we've got a new trend starting on American Airlines, or you could take the view actually it's broken out of the trend line, but it's a false break. So for me, if I had to do a trade, I would go short. I go short where they're trading now, $20.50, and I put a stop loss above the November high at 22.50 thereabouts. So I think it's an interesting trade. Should we do that trade as well? Let's do that trade. So we're going to go. So I'm going to take the view. Okay, it's broken out of this downtrend, but it's a false break and it's going to get pulled back. I'm going to use the old highs up here, 22.40. Those old highs. So let's say I go 23 for a stop. So I'm going to go short American Airlines, put a stop at 23, and I only want to risk losing 100 quid. So how many can I trade? 660? 58. Yeah, a bit less. 56. Okay, that'll do. So I'm going to sell them at 20.58, selling 56, stop at 23. If it gets to 23, I'll be stopped out. My risk is 100 and a bit pounds. Let's go short American. There we go. So 56 American Airlines at 20.53. So that's quite interesting, that. And there's definitely an argument to be a buyer or a seller, I think, for American. Do you know what? I've just realised it's gone 3:30. So I need to start wrapping things up because I am behind where I need to be, and I should be on another call. So unfortunately, let's have a quick. Is there anything interesting? Tesla. Let's have a look at Tesla. We had a look at Twitter, didn't we? Let's have a look at Tesla. They beat expectations, didn't they? Was it the day before yesterday? For me, the trend is up, even though we've had this messy stuff here in Tesla. Personally, I would still be a buyer of dips in Tesla. If I was a buyer now, I'd probably want my stop the other side of 700, which is a long way away. It's 30% away from where the stock is trading now. So I'd rather buy a dip. I don't think Tesla are going to collapse anytime soon. Famous last words. But I'd probably rather buy a bit of a bigger dip on Tesla. We don't have any trades on Tesla, do we? No, we'd rather buy a bigger dip on Tesla than where they're trading now. So we'll see. We'll see what happens. We're going to wrap things up there. So sorry I couldn't get through everything that everybody put in. We'll do it all again next week. Don't forget, any questions, feel free to drop me an email. Go to Capital.com to find out more. At Jones and Marcus on Twitter. And follow us on YouTube, Twitter and Facebook. So on Tuesday, we're going to do a Netflix video, longer form video. So make sure you're subscribed to that. We'll probably do the pound as well next week, pound against the dollar, considering it's hit 1 year plus lows today. I still think this is much harder time to trade, I think, than any point in the last few years. There's a lot of volatility. In lots of markets, there's no clear direction. So I think it's a tricky time. So I'd say if you're relatively new to trading, make sure you're being sensible and managing the risk and having stop losses in place. Because as we can see, just with stock markets yesterday, these markets can turn around really quickly. And I think sitting on your hands and waiting for things to be a bit clearer is, from an investing point of view, is what I'm doing at the moment, because things are quite messed up, I think, and hopefully we'll have a better idea over the next few months. Lots of volatility is good for trading, not so good for investing. Let's see. We'll do it all again this time next week. In the meantime, enjoy your weekend.